we show the support on gold around 39.50. I think you got a good shot at this reaching a low this week to next week, seasonally, and that's basically where it goes. And you would then expect it to probably rally after this period, going into August.
So Armstrong is predicting that this gold dip is just seasonal and we should expect a major comeback by August.
What you're seeing right now is basically you have a lot of geopolitical tensions building also in Asia. So there's been capital inflows to the dollar from Japan as well as from Taiwan and Southeast Asia in general as well. So that's what the capital flows show. As far as the geopolitical issues in the Middle East, a lot of people think that the embargo, they listen to the propaganda that, the blockade will cause Iran to collapse. And that's just not the case. But the other thing that people have ignored and are maybe not familiar with, you mentioned debt. We may find the first crack in the sovereign debt crisis in the Middle East. Most people don't realize, but during COVID, oil went down to $6.50. That's when all the Gulf states ended up borrowing extensively. So what Iran is really doing with attacking Dubai and the Gulf states is that if you cannot service your debts because you can't sell the oil, then you're looking at, I believe it's trying to create a banking crisis. And, the Western press doesn't seem to even understand that. It's all about tankers, in the Straits of Hormuz, etc. But so, Iran is playing pretty much 3D chess at this stage. They clearly made the largest stockpile of ballistic missiles. Sources that I have there have basically said that they still have probably 70% left. They've used drones and changed warfare in the sense that by sending waves of drones in, it forces Israel, etc., to shoot up Patriot missiles, which cost, over $1 million a piece to take down a $30,000 drone. So Iran, I think, people at this stage in the game, gold is backed off. It should find a low here even seasonally within, going into next week at the latest. Right. And then it looks as though the geopolitical side is going to increase going into August.
Wow, that's a deep insight. Iran is basically playing 3D chess by using cheap drones to drain expensive Western military defense resources.
Yes, look, see, I know a lot of people focus on the U.S. because it's, the biggest debt. In a sovereign debt crisis, the U.S. will be the last one standing.
Right.
If we look at it from a more practical perspective of not debt to GDP, but government to GDP, I believe that's the real test. So if you look at the United States, about 35% of GDP is consumed by government bureaucrats. In Europe, it's 52%. It's one of the highest in the world. And this is why you look at Europe, their economic growth is about half that of the United States. Europe is in serious trouble. And this is also why they're pushing for war as a distraction, because if they fail, and you're starting to see a lot of tension, even Italy has told Brussels they should be issuing debt because they're having difficulty selling it.
Yeah.
Interesting. So Europe's massive government spending is actually dragging down its economy, making it way weaker than the US.
Yeah.
Um, and that's the real problem. They keep pushing, Ukraine with war and Russia.
And they also
you've
have
actually
rising
have
defense
Macron say that.
commitments, don't they? I mean, they have to spend money in defense, isn't it?
Yeah, this is, I can tell you that Macron went to go meet with Xi before Trump did. And what he said was that Europe is no longer going to defend anything outside of its own territory. So no Middle East, but he specifically told Xi that they will not interfere in Taiwan. So that's why Taiwan became a real issue at that stage in the game when Trump got there. All right, Europe's not going to. They're giving us the green light. What about you? And after that meeting, if you read between the lines, Trump said, I suggest chip companies move to the United States. So I really, I think honestly that Trump is not going to come to the rescue of Taiwan. So I would be concerned about that on a geopolitical level. And they may take action even before the U.S. election. So you could possibly see an increase in this activity both in Asia and in the Middle East by August.
This geopolitical shift is very scary. If Europe and the US back away, Taiwan could face major escalation very soon.
And gold historically has a very seasonality to it, and it tends to, June is historically when it often makes the lows and reverses afterwards. The markets are, I would say, the press is always, downplaying Putin, he's losing, etc. The Middle East, they keep saying that, Iran's losing 200 million a day. They can't last much longer. So there doesn't seem to be a consensus that this will expand more. So they tend to think, I think it's like, okay, fine, it's all over with. And we show the support on gold around 39.50. And I think you got a good shot at this reaching a low this week to next week, seasonally, and that's basically where it goes. And you would then expect it to probably rally after this period, going into August. And a lot of people, we need something in the geopolitical sphere to make people think twice. And that may be China going after Taiwan, since Macron said, we're not interested, do what you want to do.
Well, sticking on gold, one of your more unconventional views is that the stocks and gold can rise together, with equity markets still holding near historic highs, while gold remains well above where it was, let's say, a year ago. What is that combination telling you about investor confidence in government debt now? Can you just reconcile that for me?
Because it's basically, a lot of people look at like the Great Depression, but you have to know the facts. All right. In 1931, virtually all of Europe, South America, and a lot of Asia, including China, defaulted on their debt. U.S. did not. So it sent the capital to the United States, pushed the dollar up dramatically. All right. So that creates the deflation. All right. So stocks went down. You ended up with people hoarding money. That's why Roosevelt confiscated the gold. And when you end up in a financial situation, there's, it goes in two directions. One, either the private sector is in trouble or it's the government side. So in 29, the stock market went down by 90%, granted, but the government did not. Okay, so this time it's the reverse. Why would the stocks and gold, hold up? Because we're in a sovereign debt crisis. Then you're talking about war. Going into war, they just issue more and more debt. All right. Do you really want to buy their debt and sell all your stocks and gold? I mean, that's basically it. So when the government is in trouble, it's basically all tangible assets that survive. So that's gold, stocks. I'm not talking about the IPOs that have nothing, but the blue chip stocks that really have value to them. Even real estate. That's why they've been calling it the last few years the everything bubble. That's an indication people are just trying to get money off the grid. They don't trust the banks for a lot of various different reasons. So that's why gold and stocks tend to go up during this type of period when you are in a situation where you don't trust government.
Exactly. When people lose trust in governments and banks, they naturally rush into tangible assets like gold and blue chip stocks.
Oh, we're looking at a general expansion of the economy into 2032. The AI, a lot of people have gotten wrong. They thought, with AI, you're going to see unemployment rise, jobs replaced. Not true. We have probably the first real AI system devised. It's got over a 40-year track record. The computer writes over 1,500 reports on instruments around the world every day, all by itself. There aren't that many analysts in the world to do so. All right. So it has increased our productivity. And this is what people are now finding. We have some of the major institutional clients, and I told them it's going to have the opposite effect of what people are saying. And what I hear from them is, you're absolutely correct. We haven't laid off people. It has increased our productivity. So it's not, going to replace a lot of people. It's not quite the same as the internet that replaced a lot of local stores and malls, etc., with Amazon. This is increasing the productivity. And so corporate profits have actually tended to rise a bit more because of this. So it's having a different effect than the dot-com bubble.